Welcome back. This is part 2 of our series dealing with LSL Plc, our example question. And in our previous video, we would have looked at our transactions here, and we would have gone through all of our transactions, and we would have made a determination of which book of original entry to place these transactions in. So now we are going to move over to our spreadsheet where we are going to start journalizing our transactions in the books of prime entry. So the first thing that we are going to do is that we are going to be journalizing our opening entries, because the general journal is used for recording opening balances, closing entries, recording of bad debts, correcting of errors, and anything that cannot be recorded in the other 5 books, you would have to record them in the general journal. It is also used for the recording of the sale or purchase of a non-current asset on credit. Okay, so let's go. Our year is 2013 and it is 1st of July. So our first opening balance is the bank overdraft, and because bank is an overdraft and it's a liability, that balance will go in the credit column. So here we have bank overdraft, $5,000, credit column. Our next item is premises, which is an asset. So that has a debit balance of $17,000. We have accounts payable. So we have junior accounts payable. So you have junior Jordan. That's a liability, so the balance is $500 in the credit column. And we have Sheena Brains, also a liability because they are creditors with balance in the credit column of $750. Cash, debit balance of $1,500. Equipment, debit balance of $11,353. There we have our accounts receivable. So we have accounts receivable, and there are Carol Smith, who is a debtor, balance $475, debit column, and Catherine Hope with a debit balance of $642. So these are a list of our assets and liabilities. What we do not know is the value of our ordinary share capital. We don't know what this figure is. So this is what we have to now calculate. So we have all of our other balances. So we have all our assets and we have all our liabilities so far. So we're going to use the accounting equation, which states assets equals liabilities plus capital. And we're going to transpose or flip that equation and say that our capital, whether it is for a sole trader, whether it's for a company, we are going to say that our capital is equals to our assets minus our liabilities. Now, when we total our assets, we see that we have total assets here of $30,970, but we have total liabilities of $6,250. So again, as I said, this is our accounting equation that we're going to be using, where we are going to, for our calculation here, we are going to subtract the 30,970, we are going to subtract the $6,250 from our $30,970, and that will give us our ordinary share capital. So 30,970 minus 6,250, our ordinary share capital is then $24,720. So that's the value of our ordinary share capital, $24,720. So I'm going to put the work in here at one side, where we say capital is equals to our assets minus our liabilities, and that is total assets minus total liabilities. And again, that would be 30,000, capital will be equals to 30,970 minus 6,200, which gives us $24,720. So that completes doing our opening entries here. So we're now going to move on to the other transactions. So after we record our opening entries, then we go into the transactions for the month of July. And our first transaction states Catherine Hope paid half the amount outstanding by check. So we have to look to see how much Catherine Hope owes. And we see that she owes $642. So what we are going to do, we are going to divide that $642 by 2. So that is 642 divided by 2. So we're going to divide that by 2 because that's the amount that they state in here that she is going to be looking to pay. She's looking to pay only half the amount. So 642 divided by 2 is $321. So she's looking to pay $321, but she's going to get a 5% cash discount off this $321. And we also stated that this transaction will be recorded in the cash book. So let's go to our cash book. And in our cash book, before we can record any transactions, we have to start by putting in the balances for our cash and bank. So we have to record our opening balances for cash and bank first. So on July 1st, our cash account has a balance marked down of $1,500. So we're going to put that in first. And our bank account is in overdraft. So this is a credit balance. So this will go on the credit side. So on July 1st, balance brought down for the bank. On the credit side, $5,000. Okay, if it was an asset, it will have a debit balance, so it would have gone on the side with the cash. So now we're looking to pay Catherine Hope. So this is 1st of July. Who is paying? Catherine Hope. So let's put her name. And she's paying half of what she owes. So let's calculate that here. We're going to do our calculation here. We're going to take our discount and everything. So she owes $642. That is divided by 2, which she is going to be paying $321. And then we are going to find 5% of this $321, which is $16.05. So the discount is $16.05. And then we are going to subtract to see how much she wrote the check for. So $321 minus $16.05. Let's see how much she wrote the check for. She wrote the check for $304.95. So we are going to put in our discount allowed, $16.05, debit discount allowed, and debit cash, $304.95. And this is for Catherine Hoare. Transaction number 1. On the 2nd of July, LSL Plc sold goods on credit to Carol Smith for $650 and Jennifer Johnson for $945. So we said that this is a credit transaction. It's going in the sales journal. So we will go to our sales journal and we have our date here. So this is 2013. And it is the 2nd of July, and this would be who they sold to, Carol Smith. The amount was $650. Also on the 2nd of July, sold to Jennifer Johnson, $945. So in our sales journal, we're recording the name of the person and the amount that was sold to them. Right? So that is with respect to our transaction on the 2nd. So here on the 4th, it says pay those balances on Junior Jordan and Sheena Grimes account less a 6% discount in each case by check. So they're paying the $500 for Junior Jordan and the $750 for Sheena Grimes, and in each case a 6% discount is going to be deducted. So we're recording that in the cash book as well. But we are going to do our calculation over here because remember, in our cash book, the debit side represents payments and the credit side the debit side represents receipts and the credit side represents payments. So again, in our cash book, the debit side represents receipts and the credit side payments. So we're going to the credit side to record this payment. So I'm going to do my calculation here for Junior Jordan. So this is on the 4th of July. And that's Junior Jordan. And also Sheena Grimes. And both of them are on the 4th of July. They're being paid. So Junior Jordan amount owed to Junior Jordan, $500, and that is times 6%, which gives a discount of $30. And then 500 minus $30 will then leave us with $470. So we're going to record this for Junior Jordan, the discount $30. And the amount the check was written for was $470. So that's a Sheena Grimes. The amount owed is $750. $750, and is a 6% cash discount. So $750 times 6% is $45. And then $750 minus $45, the amount the check was written for was $705. So the discount $45 and $705. When we return, we will continue our transactions.